Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report, where we take a look at some of the technicals that are driving the markets. We also have a key fundamental event today. That will be Fed's Chair Powell's testimony on Capitol Hill. He starts at 10 a.m. We thought that he might release the speech ahead of time, but that does not seem to be the case. So we'll have to wait till 10 a.m. For that to come out. He'll probably surprise us now at like 9:17 or something like that. Anyway, let's take a look at some of the technicals because they are going to be part of the equation in trading here today. They always are. So we'll start by taking a look at the euro versus US dollar. So what do we see in the euro versus US dollar? Well, one thing that sticks out in my view, and again, this is my view of what I see, and that is important in all your trading. It's what you see, is we have a nice ceiling being developed right here near the 1.0691 to 1.0694 area. Different high price last week, high price yesterday, high prices today on a number of different hourly bars, and the market rotated back to the downside finally after not being able to break above that level. If the market is going to move higher in the euro versus US dollar, we do need to get above this level and then get above the 107 level up to the 107.22 level or 23 level. That represents the 38.2% retracement of the move down from this high going, well, actually goes all the way back to early February to this low right here. That level comes in 107.23. And it oftentimes when you have a trend-like move to the downside, you need to get above the 38.2% retracement, don't you? Of course you do. If you can't get above that level, that's a minimum retracement, then the buyers aren't really winning. They're just correcting in what is a more sustainable move to the downside. So we'll see. We'll see if the market can get above that level. But right now, the market is actually lower and trading at 106.56. That's near the this old trend line here. The market broke above that trend line in trading yesterday. We have a swing high here, a swing high right here. And what is important is the market moved above that level. And you see this bar right here. That bar held support against that level before moving to the upsides. And now we're seeing the price find support against the level of the broken level again. So we need to get below that broken trend line. And if we get below that level and then the 100-hour moving average, which is another key level. Why? Because we held it here yesterday and we held it here as well in the London session. So the 100-hour moving average is also key. So trend line, 100-hour moving average. And then we look toward the 200-hour moving average. The 200-hour moving average currently comes in near this swing area right through here as well. So, and this trend line right here. So that area is important as well. So lots of important levels on the downside, including the underside of the broken trend line here, 100-hour moving average, 200-hour moving average, trend line. All those things come into play in the euro versus US dollar on the top side. Need to get above the ceiling level at 106.94. And if we get above that, we look toward the 38.2% retracement because that's the minimum retracement that we need to get to and through if the market buyers are to take more control. All right, let's take a look at the dollar versus yen next and looking at that currency pair. We're looking at the hourly chart here, and we're seeing lots of ups and down price action to start off the trading week. In trading here today, the market tried to hold against the 100-hour moving average like it did here. We found early sellers against it and found sellers right near it. In trading here today, the market rotated to the downside, but that rotation to the downside fell short of the low price that we saw in trading yesterday, and that has led to a rotation back to the upside. Let's just say that. And on the top side, what did we do? We found a little bit of a peak above the 100-hour moving average, currently at 136.16.4, but no momentum there. If we do get above that 100-hour moving average, let's say Fed's chair is more hawkish in his comments, the 100-day moving average of 136.53 would be the next key target. We moved above it last week right here and here, but could not sustain momentum and fell short of the 200-day moving average. That's a green line in this chart. So we need to get above the 100-day moving average in order to push this price more to the upside. If we get above that 100-day moving average, we'd have traders looking toward our high prices that we saw in trading last week and also toward the 200-day moving average. That's up here, 137.36. So the progression would get above the 100, go test the high price that we saw right here, 136.90 area, then get above the high price that we saw right here, 137.09, and then get to the 200-day moving average of 137.36. So the levels are in play. We're just right in the middle of those levels. So let's see how things go with the dollar versus yen, see how it goes with the comments from the Fed chair. Let's take a look at the sterling versus US dollar next. And if we take a look at this currency pair, we notice that again, lots of ups and down price action in this currency pair. If I were to put a box around what we've been seeing here, very wide trading range down to 119.14 up to 121.46. Well, a couple hundred pips or so. We do have a number of different lows through here at this yellow area. We have a number of different highs up here near the high area right there. And in between, we have the 100 and 200 hour moving averages, and the price has been waffling above and below that going back in time for quite some time now. The two moving averages are near converge. And the 100-day moving average, that's this step line right here, is starting to move toward those two moving averages as well. So we need to, in trading here today, what we see, we saw the price move back below the 200-hour moving average and try to stay below it. We just moved a little bit above it and then came back down. So that 200-hour moving average at 120.12 is going to need to be broken on the top side in order to increase the bullish bias. If we can't get above that level, the sellers are more control, and we look toward this swing area down here. Then we look at the swing area down here as next key targets for the sterling versus US dollar. So that is a progression to the downside. On the top side, get above the 200-hour moving average, start to look toward the, by the way, this 38.2% retracement. That level held resistance in trading yesterday, and again, on Friday and yesterday as well. And in trading here today, is tried to hold the 38.2% retracement. It did break above it and failed above this level, but that still increases this level's importance because notice here we did also find some resistance against it in the next hourly bar. So 120.50 needs to get above that level, and then we start to look toward this trend line, start to look toward the 50% retracement level as the next target on top side for the sterling versus US dollar. Finally, I want to take a quick look at the Aussie versus US dollar. Why? Because the Reserve Bank of Australia came in and they raised rates by 25 basis points, but it was deemed a more bearish or a dovish raise in rates. We could not get up to the 200-hour moving average, could not get up to the 100-day moving average right here. We can only get up to the 100-hour moving average right here before the market started to rotate back to the downside. Fell below this floor through here where a number of different swing lows. We tried to hold support against it, but couldn't, and then rotated back to the downside. As you can see, we're trading near the low levels. What does that look like on the daily chart? Well, on the daily chart, we are testing the 50% retracement of the move up from the October low to the high that we saw in last month's trading. That level comes in at 0.6663. The price is currently trading just below that level, 0.6659. So sellers are trying to take more control if able to stay below that 50% retracement. We look toward the December low down at 0.6628. Sellers are more in control. We'll see how that all pans out, but they're selling the Aussie versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.